Hi, I'm April, here with your tax fact. When you go into business for yourself, you usually just get started and deal with the legal parts later. Others will form an LLC because their lawyer told them to do that. But what's an LLC really? An LLC stands for Limited Liability Company, and it's really a way to protect your personal assets from any kind of lawsuit. It's not really a tax entity. There are only about 4 or 5 tax entities that most people use: Sole Proprietor, Partnership, S Corporation, C Corporation, LLPs, and LPs. An LLC will default to a Sole Proprietor Tax entity when there's only one owner. If there are 2 or more owners, then you default to a partnership. You must make a special election to be treated as an S Corporation or C Corporation. These decisions and which tax entity to choose is varied and complex, so it's best to talk to a tax professional. One of the main issues with an LLC is to make sure that you keep the business separate from your personal finances. That means opening a separate bank account and credit card to run your operating income and expenses through. If you need to pay for something with your own funds that's a business expense, one option is to get a reimbursement check from your company, but you should prepare an expense report. It's a great idea to do that. Don't ever pay for personal expenses with business funds. It's best to just transfer the funds to your personal account and pay for the expenses there. If you happen to pay for personal expenses out of the business, you could lose your LLC protection. Since you're commingling your business and your personal expenses, the courts may not be willing to fully protect your assets. So be careful with that. Remember, LLCs are not tax entities. They just provide you with a force field protection over the tax entity that you choose. I'm April, and this has been your friendly tax fact, brought to you from Ambrozy Accounting.